Hey everyone, welcome back to Corporate Decoder, the place where we dive into the nitty-gritty of corporate filings to uncover the real story behind the numbers. And today we've got Vertical Data Incorporated making an appearance with a filing that is more about what is no longer there than what is, so get ready for a surprise twist. You might not expect from a company report where we will unpack a rather unusual share surrender that is about to shrink the company's outstanding stock dramatically. Stick around to see what this means for investors and the company's future. Also, before we get into it, if you love getting straight to the point insights from SEC filings and want to decode the financial world with us, make sure you are subscribed and join our Discord community linked in the description below. So we're looking at a Form 8K filing from Vertical Data Incorporated, and an 8K is basically a report of major events that shareholders should know about. This one is dated the 8th of October 2025, and it speaks to a significant change in the company's stock structure. Previously, the company told us in its quarterly report for the period ending the 30th of June 2025 that there were a substantial number of shares of its common stock out there. We are talking about over 41 million shares. That was as of the 27th of August 2025. Now here is where things get interesting. As of the 8th of October 2025, some key people at Vertical Data Incorporated, its founders and other important shareholders, decided to voluntarily give back a massive chunk of their shares to the company. They surrendered over 31 million shares, and they did this for absolutely no payment. That is right, they just gave them back. So what is the big deal then? Well, it means the total number of shares that are actually in play and trading out there has dropped dramatically. From over 41 million shares down to just over 9 million shares after this surrender. This is a huge reduction in the total supply of shares available. From a financial perspective, this can have several effects. It can make each remaining share represent a larger piece of the company. If the company's value stays the same, but the number of shares goes down, each share becomes worth more proportionally. This could potentially boost the stock price if demand remains constant or increases. Think of it like this: if you have 100 slices of pizza and you suddenly only have 20 slices left, but people still want pizza, the price for each slice will likely go up. It also affects metrics like earnings per S-share. If the company earns the same profit now divided among fewer shares than earnings, per share number will look much better, which can make the company appear more profitable on paper. However, it is crucial to remember that the company's actual profit hasn't changed. It is just being spread across a smaller total. Now, this kind of voluntary share surrender is not a common occurrence. It often signals confidence from the founders and major shareholders in the company's future prospects. They might be doing this for a few reasons, perhaps to reduce dilution from future stock options, or to make the company's financial structure appear leaner and more attractive to potential investors or partners. It signals a belief that the company is undervalued or will significantly increase in value. This move could also be part of a larger restructuring strategy or an effort to meet certain listing requirements on an exchange. While we only have this 8K filing, which is very brief on the specifics, it is the magnitude of the surrender that catches the eye. It is a strong statement from management and early investors about their commitment and outlook. Looking at the bigger picture for Vertical Data Incorporated, this is a bold move. Instead of us going through lots of financial tables, which are not the main story here, the story is the shares. This filing is all about the capital structure. It is not about revenue growth or profit margins in this specific document. It is about fundamentally changing the ownership landscape of the company. Now, for our analysis, this share surrender by founders and major shareholders is a positive signal. It shows a deep belief in the company's inherent value and future growth potential. By reducing the number of outstanding shares, they are increasing the ownership stake of each remaining share. This can lead to a higher stock price and improved per share metrics, all else being equal. However, investors should always remember that share count alone doesn't guarantee success. The company's underlying business operations and profitability are what truly matter in the long run. The risk here is that if the company's performance doesn't improve or if the market doesn't react favorably to this, change the stock price might not see the expected boost. It could also be an attempt to artificially inflate per S-share metrics without improving the business itself. In conclusion, Vertical Data Incorporated has substantially reduced its outstanding shares through a voluntary surrender. This is a noteworthy event signaling strong confidence from insiders. While it can have positive effects on per S-share value and potentially the stock price, it is essential to monitor the company's actual operational performance. The direction is towards a more concentrated ownership structure, which could be a strategic advantage if executed well. Alright, that is our quick decode of Vertical Data Incorporated's unusual filing. What is your take on this massive share surrender? Do you think it is a smart move or a red flag? Drop your thoughts in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more insights into the corporate world. And don't forget to join our Discord community for more discussions. Thanks for watching. See you next time.